this has actually been one of the best years on record for emerging market returns across all sorts of different asset classes. Within EM, frontier markets have certainly grown in importance, in our world. Now, these are emerging markets maybe at an earlier stage of their development.
Banks in emerging markets play a vital role. They are the ones who are driving the economic development and increasingly the sustainable development in their economies. And we see our role as one of channeling capital, bringing investors and raising awareness while adhering to the ESG guidelines and second-party opinions and ESG rating requirements for our projects.
Hello, my name's Charlie Olivier, your host for today's episode of This is Deutsche Bank, the podcast for news and trends shaping the world of banking and finance. Today's the 21st of October, and we're going to be talking about emerging markets. They make up nearly half of the world's GDP these days, a huge jump from where they were 25 years ago, and some economists think that within a decade, they could reach 65%. Can that growth be achieved sustainably, and how will it be financed? To help us understand the topic, we're lucky to have with us Ezra Turk, who runs sustainable finance for our investment bank globally, and Ollie Harvey, who leads our emerging markets FX research. Thank you both for being here. Let's get started. So emerging markets, it covers a very diverse range of countries, I know, but if you had to generalize, what would you say the mood is like at the moment? Ollie, do you want to start us?
Well, thanks very much, Charlie. I think heading into this year, a lot of emerging market investors might have been forgiven for a degree of trepidation. I mean, bear in mind, we've just come off the back of two enormous global shocks of the pandemic. We had Russia's invasion of Ukraine, and we then had a Trump administration that was coming into office promising to really redraw the entire global trade map. If we fast forward 9 months, this has actually been one of the best years on record for emerging market returns across all sorts of different asset classes. To give you one example, the MSCI EM, which is the benchmark emerging market equity index, is up nearly 30% this year, which is more than the S&P 500. So I think there's been a lot of energy and enthusiasm in EM, which there hasn't been for some time. And I think if we look at what's driven that, of course, a weaker dollar has helped. But we've also had a very prudent stance from emerging market policymakers when it comes to fiscal policy, when it comes to monetary policy. And that's one of the reasons why we think that can continue.
So fascinating stuff. Is that what you're hearing from clients, Ezra?
Yes, it's very much in line with what we've been hearing, Charlie. And with the global macro picture shifting rapidly, along with the rules of geostrategic engagement, emerging market economies stand at a fascinating intersection of opportunities and challenges. So that provided a great backdrop for the 4th edition of the annual Deutsche Bank Emerging Markets Conference during the IMF World Bank meetings in DC last week. And we hosted policymakers across emerging markets, including Turkey, Argentina, South Africa, Mexico, and Egypt, amongst others. And our key institutional investor clients also took part in this conference. And we had many lively discussions, and it's very much in line with what Oliver just mentioned. And what really stood out primarily was the confidence and prudence of policymaking in EM in the face of increased unpredictability in global macro. It was reassuring to see that the Global South has the resilience and the adaptability in an increasingly complex world.
So you think that'll keep going? You think the growth will keep going, Ollie? D?
Look, there are a lot of really interesting debates in EM at the moment. If you look at China, you have this extremely ambitious reform agenda that we haven't seen for many, many years, the so-called anti-involution reforms. If you look at asset allocation, will big asset allocators globally be returning funds to the emerging market asset class after what's been quite a long hiatus? I think something that I wanted to mention was within EM, frontier markets have certainly grown in importance, in our world. Now, what do I mean by frontiers? These aren't your big emerging markets of old, your Brazils, your Koreas. These are emerging markets maybe at an earlier stage of their development. But what I think that offers both the investment community and the corporate sector is catch-up potential, real catch-up potential. And that's been reflected in our research at Deutsche Bank within the emerging markets team. we've just published our emerging market handbook, which is really, I guess, an encyclopedia of market access across EM. We now have 39 countries covered within this handbook. So, from Sri Lanka to Pakistan to Ghana to Nigeria. It's nearly 300 pages long. So it really is a book, but there will be a shortened version on our Research Institute website.
Sounds great. So for listeners, if they want to read it, how do they do that?
Well, Charlie, it's a 300-page report, but the summary is going to be on our great Research Institute website, which is publicly facing. It was started a year ago. There's lots of interesting stuff in it, and it will be there.
Great. And we'll provide a link at the end of the show notes. Ezra, in your role as running sustainable finance for the investment bank, what are the sectors and areas that clients are focusing on most?
I would start with renewable energy, which is paramount for substantial emission reductions. And we're seeing huge focus on utility scale solar and wind, but critically also distributed generation and grid infrastructure to bring clean power to more communities, which drive large incremental gains in decarbonization. I would also say that sustainable infrastructure beyond energy, such as green buildings, electric transport networks, and advanced water and waste management, underpins the sustainable development trajectory of emerging market economies. Beyond the green aspects, social in ESG is becoming increasingly more important in emerging countries. This translates to financing for affordable housing, for healthcare infrastructure, and education facilities. There is also a growing focus on projects that promote sustainable agriculture as well as food security. And finally, Charlie, nature-based solutions is another important topic in this space. It's gaining traction, focusing on biodiversity and the rapidly developing carbon markets. This involves investments in sustainable agriculture, in forestry, and ecosystem restoration, often creating new revenue streams through carbon credits for sovereigns in emerging markets.
So that last point sounds really interesting. Can you tell us a little bit more about how forest conservation works? What are the financial products that can be used to help that?
Well, the market has developed through the carbon mechanics, really focusing on Article 5 of the Paris Agreement. And what is exciting is at the last COP29 in Baku, there has been an agreement and buy-in from the parties on the implementation of Article 6, which foresees the highest environmental integrity and is very much based on nationally determined contributions of sovereigns. So we are exploring how we can utilize these new mechanisms foreseen by the Paris Agreement and the latest COP, and in preparation for Brazil, COP30, where we will be discussing with many clients and stakeholders and the host countries our new concepts and ideas.
So I just want to ask you a bit more about nature-based solutions. If you're a country that has a large forest, say, and it's absorbing carbon, how do they get paid for not cutting it down? Or how do they get paid for preserving that forest?
So according to the Paris Agreement, as long as the countries are on a downward emission reduction path in line with Article 6, and as long as they have prepared their nationally determined contributions and submitted for review with the UNFCCC, the United Nations Framework Convention on Climate Change, we could explore Article 6, which foresees such countries selling their carbon capacity through certificates or through what we call the internationally transferable mitigation outcomes to either other countries or to other parties. So that certainly would bring monetization and funding to emerging countries with rainforests. And it would be an amazing mechanism to enable these countries to invest in their forests and to protect their forests.
So how do banks help?
Banks in emerging markets play a vital role. They are the ones who are driving the economic development and increasingly the sustainable development in their economies. They act basically as the critical conduit of capital, channeling investments into the key sectors we just discussed. This often involves traditional financing mechanisms such as trade finance, such as cross-border borrowing and lending. and all within the specific regulatory and economic landscapes of the respective countries. And we see our role as one of channeling capital, bringing investors and raising awareness while adhering to the ESG guidelines and second-party opinions and ESG rating requirements for our projects.
Thanks, Ezra. So covering a lot of ground. Ollie, what about your work? How does that fit into getting finance from one place to another?
Yeah, of course, Charlie. So, on a day-to-day basis in research, what do? We publish reports, we talk to clients, we help the bank manage its risk. What I think is especially exciting about research in emerging markets need capital. Typically the model is that the developed world has a surplus of capital and that should flow to emerging markets. So I like to think our job is directing capital in an intelligent and efficient way to the parts of the world that need it, which I think also has a really positive effect because it's about bringing incomes, it's about bringing wealth levels of ordinary people in those emerging markets up towards the ones that we enjoy here today sitting in London.
It sounds super fascinating work. How did you get into it? What do you think the sort of skills are needed to do what you do, Ollie?
Yeah, I think what's really interesting about emerging markets, of course, there is an economics angle to it. And of course, there is a very quantitative angle to it. But there are so many other things as well. Again, to go back to what Ezra was talking about, thinking about emerging markets from a sustainability perspective, thinking about emerging markets from a developmental perspective. I guess, was a little bit unusual in terms of my undergraduate degree, which was actually in history, not in economics. I did that later on. But what's interesting from a historical perspective, if we think about development, we need to go back, economic development, we need to go back a lot further than the last 50 years, because really the roots of economic development are in the Industrial Revolution in the 19th century. So actually I found that history degree ended up being quite useful. And I think in emerging markets more broadly, having that diverse way of thinking about things ends up being very helpful because there are just so many different roles.
And is that the same for you, Ezra? What was your career journey?
I started in banking from right after university. I studied business administration and then finance, just because I was always fascinated by banking. But having grown up in an emerging country, I was always interested in development as well. So we're looking to hire people in emerging markets in sustainable finance who are good thinkers. I would say out-of-the-box thinkers, a little bit to what you said, Ollie, and looking for people who have a single-minded purpose and determination. Because, our markets, whether it's EM or whether it's sustainable finance, they're developing. In sustainable finance, ESG, we are developing new products. So we need innovation, we need original thinking, and we need a very deep understanding of the regulatory constraints and developments because it's all still progressing. We need people with excellent communication skills, a good grasp of corporate finance and markets, and those things we can teach as well for grads joining us right after university. But it's really that passion that we need. Passion to make a difference, whether you're working in traditional, conventional finance or in sustainable finance. That passion determines for us the success of the individual and the firm.
Well, it sounds inspirational. So we're going to finish with one question that we ask every guest on the podcast, which is if you had to pick one thing that you're dedicated to, it could be in your personal or professional life, what would it be? Just one thing. Ollie, get us started.
Well, obviously I have to say my family is number one, my wonderful wife and two young daughters. But I think it's been a fantastic opportunity working at Deutsche Bank. And to go back to what I said earlier, from a professional perspective, that idea in emerging markets that what you're trying to do is raise living standards ultimately in the rest of the world is something that makes it worthwhile to come in the morning.
And you, Ezra?
I'll answer it in the professional sense. For me, what I'm really passionate about is delivering a great service to our clients and really utilizing the full resources of the bank, acting in an entrepreneurial way to develop new products and really help them to achieve their ambitions of success. And the deep dedication for me means delivering excellence to clients.
Thank you both so much for joining. It's been a real pleasure. And thank you to you for tuning in to This is Deutsche Bank. If you enjoyed what you heard, please do subscribe or leave us a comment. We'll be back soon with another episode. In the meantime, take care und bis bald.
This podcast has been produced by Deutsche Bank and may contain research as defined in MiFID II. The information discussed is believed to be reliable and has been obtained from public sources believed to be reliable, although Deutsche Bank makes no representation as to its accuracy or completeness. Opinions, estimates and projections discussed constitute the current judgment of the speaker at the time of recording. They do not necessarily reflect the opinions of Deutsche Bank and are subject to change without notice. For further important information, please visit research.db.com.